Good afternoon, everyone. My name is Khai. Thank you for taking your precious time off in joining me in this webinar. First of all, I'd like to say that I'm sharing this information based on my based on a practitioner point of view, based on my personal opinion and experience, as opposed to representing any particular company. This will be the agenda for today. It should take about 45 minutes. We'll go through I'll do a short introduction, then we'll look at the foundation of a financial plan, and we'll explore the importance of medical insurance. Then we'll discuss about 3 key trends and 3 key considerations for the medical insurance, and we'll end off with a Q&A session. If there's any questions you have, do leave them at the bottom at the Q&A chat box. We'll address them at the end of the session. A little bit about myself. I graduated from NUS with a bachelor in electrical engineering. Spent the first 5 years of my career in a local industrial automation company. I switched over to the financial services in 2011. I'm a chartered financial consultant. I help busy professionals in their journey to financial clarity. Having an engineering background means that I do have a systematic approach to help my clients to understand their financial portfolio from a bottom-up approach so that we can address any obsolescences, loopholes, or redundancy in their programs. Outside of work, I'm passionate about running and soccer. I'm 41 this year. These are my 3 kids. I'm father of 5, 7, and 9. We do have an eldest girl that was born in 2010. Unfortunately, when she was born, she was diagnosed with a genetic disorder such that her body could not process the protein in milk. The byproducts were toxic to her central nervous system, and in the first 2 months, we spent her time treating her in the ICU. And in that year, we visited the hospital throughout the year and incurring medical expenses of close to $50,000. Unfortunately, this amount couldn't be claimed by any insurance. Eventually, she will leave us at the age of 10 months old at the end of the year. This is one of the reasons why I came into financial services. I have a strong conviction to make sure that my friends and clients would never have to go through the same financial stress as we did. I guide my work with a simple principle, that is to guide them in their journey to financial clarity, to partner them in their journey to financial clarity, because I feel that the financial planning process is a long journey, and it's more important for me to create trust and build long-term relationship more than anything else. In my past 10 years of client meeting experience, I think there's 2 major problems that consumers face: frustration and confusion. Frustration probably because maybe of the lack of service or advice, and confusion because of newer and better products that are being constantly launched into the market and compounded by confusing government schemes like MediShield Life, ElderShield, CareShield Life, and CPF Matters. I hope at the end of this webinar, we can clear up some confusion regarding medical plans and why the medical premiums are rising. If I were to sum up financial planning in 3 simple steps, that would be: first, financial planning, we should lay the foundation of financial planning in terms of protection. Once that is done, once you have an appropriate amount of protection so that you can protect yourself against unexpected circumstances, then the second phase is to save and accumulate. And lastly, at the end of the journey, we will distribute our assets that we build up over time in terms of estate planning and legacy planning. Why is there a case for medical insurance? I've compiled the claims experience, the claims that I administered since I started in 2011, and you will see why medical insurance is so important, because that makes up of 77% of the claims that I have helped to administer. To date, in terms of medical insurance, I helped my clients to claim more than $1.1 million And by showing this simple chart, you should be able to agree with me that medical insurance is very important. Imagine this amount you have to pay out of your own pocket. And I would like to stress the importance of medical insurance with two case studies. These are actual claims that I've helped. This is my my client's mom. She bought a integrated shield plan for private hospital, and she had a claim for doing cataract operation on her two eyes. This is a claim based on one eye, which is 10,000. So in total, she claimed about $22,000 for the insurance that she paid. And the other case study I would like to share with you is the largest claim I have helped to do so far. The client is 39 years old. He was actually healthy, but somehow there was a viral heart attack, and in the end he was on life support for close to a month, and he was hospitalized for a total of 3 months. This is the bill that we got from the 2 month plus of hospital stay in the private hospital. It came up to about 800 over thousand. That was the point whereby we made the decision to transfer to a public hospital, the National Heart Center, to continue the recovery. So in total, he was hospitalized for 3 months, and including the 1 year follow-up, the total claim came up to be 900 over thousand. So this is I couldn't stress further the importance of medical insurance with this experience that I went through. I'd like to leave you all with a quote at this point: buy when you don't need it, because when you need it, you may not be able to buy. So something to think about. So what does medical insurance falls under? It actually falls under the hospitalization and surgical benefit of the different types of insurance plans and benefits. And I will consider it as a term plan because although it's renewable for lifetime, every year when you renew, it's good for 1 year. And having, as a Singaporean or PR, you should have MediShield Life or the Integrated Shield Plan. So this is one of the common safety net that all Singaporeans and PR will have, at least the basic MediShield Life. And it falls under the surgical and hospitalization and surgical benefits. So I'd like to I'd like to share a bit about MediShield Life. So since November 2015, MediShield Life has replaced the previous version, which is MediShield. And with that replacement, the lifetime limit was taken away. At the moment, there's no lifetime limit, and the coverage, the annual limit of MediShield Life used to be 100,000, but since 1st March, the annual limit of MediShield Life has been increased to 150,000. MediShield Life is more meant for bills incurred at a public hospital, B2 wards and below. So you can imagine B2 wards will be subsidized wards that are non-air conditioned, and it gives Singaporeans and PR protection for life. And as for integrated shield plan, you will hear shield plan or MediShield Life. So all these plans could be rather confusing for some of the consumers. So this is a simple picture for you to understand what is all this about. When everybody, if you're Singaporean and PR, you will have a MediShield Life that forms the base level of coverage, which is meant for public hospital B2 and below. But when you take up a private insurance plan from one of these 7 companies, you would have an integrated shield plan. And if you look at the names below, if they sounds familiar, then most likely or not, you should have it. And this is the additional private insurance coverage from the different insurers. And when you take up the integrated shield plan, you no longer deal with a CPF, because this portion you will just deal with the insurance company that you bought your integrated shield plan with, and they will liaise with CPF on any claims that comes along. So that's an overview of an integrated shield plan. So what are the key trends that we are expecting, we are looking that's coming along? So these are the three key trends: rising medical premiums and the move towards panel specialists, and riders now would include co-payment features. Let's look at number one, rising medical premiums. So when in 2015, when MediShield Life replaced MediShield, there was a huge premium increase from 26% to 300%. That was to spread out the premiums more equally and spread out more of the premiums to the younger ages, so that the MediShield Life premiums when you're older becomes a little bit more affordable. And when in the first March that just passed, there was another increase. There's a slight increase of 11% to 35%. That was accounted to give better benefits from the 100,000 annual limit to 150,000. So MediShield Life premiums has MediShield premium and MediShield Life premiums has increased over the past few years, and you will see that because of the claims experience, the rider that we could buy last time before March 2018 used to cover full. This is a rider from AXA, which is a basic care rider. It covers a person fully in when he incur hospitalization bill or surgical bill. So this rider has been the premiums for the 100% rider has been increasing over time as well. And in the recent rates earlier before March 2000 and 2000 March this year. Last year alone in February there was an increase, and you will see that the premium generally increased by 1.5 times to even 2 to 3 times. This is the full rider option C from Aviva. So you can see that the premiums for the full rider option C has increased like close to 3 times over the years. And that's because of the claims experience that was rising over the past couple of years in the private hospitalization. And secondly, the second trend is that there's a move towards panel specialists. And why is there a move towards panel specialists? Is because insurers can better manage the cost and to make sure that they are reasonable and customary based on the treatment that they receive. And you will see that if treatments are sought at a non-panel specialist, there will be a little bit more deductible that will be borne by the insured. And for the co-payment cap, there's no cap on the co-payment if a person chooses to be treated by a non-panel specialist. However, there are also benefit when an insured goes with a panel specialist, because some of the insurer actually gives a higher amount of coverage when your treatment is sought under their panel specialist. So this one example from Aviva. The policy year limit is supposed to be 1 million, but however they will increase it to 2 million if clients choose to go with a panel specialist. And so if you visit a non-panel specialist, expect yourself to pay a little bit more. So you can see that the deductible based on a non-panel specialist is higher among all the rest of the deductible. But however, if you visit a panel specialist, you expect to pay a lower amount of deductibles. So the advantages of going to a panel specialist is that it could give you higher coverage and benefits. And when you get treatment from a panel specialist, usually they will ask for an assessment, and that will give you certainty of the claim outcome. That means you don't have to worry that whether the claim is at the end of the day, you don't have to worry that the claim is being rejected. And usually most now insurers will give the cashless admission, will help clients to have a more positive client experience in terms of cashless admission and discharge if they go with the panel specialist. and they also provide certain preferred consultation rates if clients visit the panel specialist. So the last trend that I would like to talk about is the co-payment feature that was recommended by MOH from March 2018. So when this recommendation came in, right, the insurers started to change their riders, such that they will include the 5% co-payment, and it was recommended to have a cap on the co-payment. So, and over the past few years, the new riders have been introduced, then all the old riders were being phased out. So, and also in line with the recommendation, there is a cap on the co-payment if clients visit a restructured hospital or public hospital or a panel specialist. So typically across the board, you will have a 5% co-payment that's capped at 3,000 under panel specialists. And why is there this co-payment feature that's being introduced? It is over the years, I think because of bad claims experience, they want to address overconsumption or overcharging. So we don't know whether who is right or who is wrong. However, with a co-payment feature, it does shows that it brings down the unnecessary claims, and that is to prevent medical premiums from inflating over time. Because if there is bad claims experience throughout the years, then ourselves as a consumer will find ourselves paying higher and higher premiums, which is what we see over the last 3 to 5 years, whereby medical premiums have been rising every 1 or 2 years. And this with the co-payment, there was this recommendation to have a co-payment cap so that we can be protected against exceptionally large bill. However, do note that this is more meant for panel specialists. So with that with these 3 key trends, I'd like to discuss about 3 key considerations that you might want to think about when you choose your medical insurance. So in terms of the importance of medical insurance, I'd like to link it with the financial planning priority. From a professional point of view, I think this is the most important priorities when I talk to clients. First of all, I would like to tell them that hospitalization is the most important protection that you have to consider, because we wouldn't want to pay our medical bills from our pocket. So after hospitalization is being taken care, then we move into critical illness coverage. It means to make sure that we are self-sufficient. We have that extra lump sum in the event that we are not fit to work for 3 to 5 years. And if you have additional responsibility, do consider death or TPD coverage. And some of the other more optional coverage will be accident or disability. So once you have the first layer of protection being laid out in your financial plan, then we could move on to considering medium to longer term savings and investments. And the same thing, like what I show you based on my own claim experience, these are some of the claims that the insurers has received. You can see that for large bills, it could range from for a large bill that's not so big, it could range from 40 over thousand to 70 over thousand. But if you have a bill like 600 over thousand, more than $500,000, then where do we find this money to pay? So I think it is wiser to transfer this risk to an insurance company, because they are the one that can do the risk pooling. And the number two consideration will be the importance of having a rider. Although you can take up the integrated shield plan without a rider, but let's see what does a rider do. In the top row, you'll see that for this example, right, the person has a private hospital plan from income, but he doesn't have a rider. So for a bill of 40,000, he will have to pay around 7,000 plus. However, if he does have a deluxe care rider, which is offered by Income Shield, then the whole system, the whole dynamics change to just 5% co-payment, which is 5% of a 40,000. So for this guy, for this example, he only need to pay $2,000. And for this example, if let's say we have if let's say we have a much bigger bill, like 300 over 1,000, let's say a 300,000 bill, so the amount that you have to pay if you don't have a rider, that means if this person take up from Aviva, this case study is from, this example is from Aviva, right? If the person has a private hospital plan, which is MediShield plan one, without a rider, he would have to fork out 29,000 on his part. However, if he has a rider, which is the one that covers more comprehensively, then he will only have to pay $4,000 out of the 300,000 medical bill. So the third consideration would be the choice of treatment. You see how much should we insure ourselves for medical insurance? So some of the consideration will include whether are you okay with just MediShield Life coverage, which is meant for public hospital B2 and below, or you will want to have treatment and more comfort at private hospital. You see, some of the considerations will be comfort and speed of treatment. You just imagine if you are traveling, would you do you like to travel? Do you like to travel and stay in a budget hotel or 5-star hotel? You see, and the future premiums payable is also a big consideration. So for this webinar, actually I have compiled the premiums payable from, let's say if a client is age 41 until all the way 85 years old, what is the total premiums payable from this age band? And why I choose this age band is because I think in the earlier ages, the premiums are not so significant. So from 41 onwards is where the bulk of the premiums comes in over your lifetime. And this diagram is a bit small. Later I will expand it. But you will see that the 7 insurers are Raffles Insurance, Great Eastern, AXA, AIA, Aviva, Income, and Prudential. So a slightly bigger image, but it's still a bit small. Later I will have another slide to highlight the key points. So in terms of cost efficiency, Raffles, which is a little bit more, Raffles Shield, which is a little bit more less well known, is actually the number one in terms of cost effectiveness. So this table of comparison is for private hospital wards with a rider. So the range of premiums that you expect to pay would be around 150 something to 150 something thousand to 290 something thousand. Yeah. So in terms of the first three, that's most cost effective, these are the key key benefits that you will get to enjoy if you are on them. So for Raffles Health Insurance, the total premiums payable from age 41 to 85 is 153,000. So Great Eastern is ranks number second at 172,000, which is very comparable to AXA Shield, which is 180,000. So there are certain limit. So different shield plans have slightly different benefits, but they are also quite similar. So it's really very hard to compare apple to apple because, for example, for Raffles Shield, they do have a very, in terms of cost, they are very good. They are the most cost effective. However, the 1.5 million policy year limits applies to panel specialists only, and of course their own hospital. If let's say outside of panel specialists, the policy year limit will be down to 600,000. Great Eastern has a better policy year limit because the 1.5 million policy year limits applies to whether non-panel or non-panel. AXA recently also revamped their benefits. So for non-panel, their policy year limit is 1 million. However, for panel specialists, their benefits, the policy year limit they will increase to 2.5 million, which is the highest in the market. And for these three, the pre and post hospitalization are very attractive because you can have a follow-up for up to a year. So for more information, you have to really go to the individual companies brochure to have a look. So for this premium, right? So if you feel that over the lifetime to pay this premium is a bit it might be a bit too much for you to take, you can consider the public hospital coverage. So I've done a similar table to compound the full premiums, and you will see that the Raffles Shield still stands at number 1, and Prudential becomes number 2, and AXA remains at number 3. So in terms of total cost, this is the ranking in terms of total cost. So for if over your lifetime, if you feel that the future premiums is becoming higher and higher, so if you were to change to a public hospital coverage, you can expect about a 50% savings. And these are the key, I think these are the key features of the top 3 in terms of the most cost effective. Raffles Shield, the policy year limit for the 3 are also similar, around $600,000, and the pre and post are very similar. If for Raffles, if you go with a panel specialist. So I think in conclusion, if you feel that if you work out your future premiums payable under the private hospital coverage, if you feel that you want to have some savings, then you can opt for to come down, to reduce to a public hospital coverage. Then you can expect around 50% cost savings over your lifetime. And in terms of the amount that you are paying over for private hospital cover, so let's use a ballpark figure of 180,000 from 41 years old to 85. That actually in terms of annual premium, it will be about 4,000 per year. So if let's say if you were to go with a private hospital coverage, expect to pay about 4,000 a year on average over these 45 years. So where does you can either, I mean, of course, for 180,000, you can either pay from your savings, or the other way is to, if let's say we look at this a sum of money that's being set aside for our medical plans. So the left diagram shows that if you are prepared to draw down a sum of money, which is 86,000. If you take out a sum of money, if you take out 4,000 per year over the lifetime, and if let's say we assume that this money is being compounded at a rate of 4%, so 86,000 will last 45 years based on a 4,000 withdrawal. Or the other way is to consider a lump sum that you can draw perpetually, $4,000, and that will work out to be 100,000, because 4% of 100,000 is 4,000 every year. So I've come to the end of this webinar, and I'd like to leave 3 points for you to take away. So number 1, I think for me, I feel that financial planning is a long journey. Our personal circumstances can change. So one thing for sure is do review your plans regularly with your trusted financial consultant. And if you're not sure what you're doing, it's okay, but doing something is better than not doing anything at all. And of course, if possible, try to understand what you have bought over time. And in terms of the financial planning priority, I feel that the number 1 priority should be the hospitalization plan, followed by critical illness, to make sure that you can protect yourself, to make sure that you have the monies if something happened to yourself. And if you have more responsibility, consider death and TPD coverage. And once the foundation of financial plan is being laid out, then consider medium or longer term savings and investments. And before I move on to the Q&A, if you are interested in the presentation slides, do send me an email. I'm happy to share. And if there's anything I can help, do let me know. So do drop me the same thing. Do drop me an email and let me know. Thank you for for staying with me until now. And let's see if there's any questions that we have. Yeah. Okay. So before I wait for answers, the questions to come in, I'd like to go through some of the more common questions that clients actually ask. How can I switch insurer? So this is one very common question from clients. So okay, the benefits of the benefits of the shield plan keeps changing. I mean, it's not fixed for now. I mean, it's fixed for now, but it can change over time, and the premiums can also change over time. So if you are intending to switch, I think the first consideration is whether do you have any existing medical insurance, existing medical conditions, because that will affect your ability to change insurer. Because usually when you switch insurer, it means that you're taking on a new plan from another insurer, and so usually they will exclude any existing medical conditions that you have. So one key consideration for switching insurer, if you are worried about the cost, is whether you have existing medical conditions or not. If you have medical conditions, at the moment you have existing medical condition, then it's not advisable for you to change unless it's a very minor medical condition. So if at the moment you're free from any medical condition, then I think you can look at the benefits and the premiums from all the different insurers and select the best that most suitable for you. Common question number 2 is how fast are the claims, and some of them hear about bad claims experience with some of the insurers. Is that true or not? So based on my own experience, there are claims that are administered as fast as 5 days, but there are also claims that took longer than expected, 2 weeks to a month to even 2 months. So what I can say that in terms of the speed of claims, it really depends on whether at the point of application have everything been declared properly and truthfully or not. Because usually, if you have done it, then when it comes to claims, then the insurer will have all the information of your past medical history, and based on your declaration, and they'll be able to administer. They were able to process the claims much faster. However, if there are certain things that they find that hey, this could be a existing medical condition, then that might delay the claims a little bit. And I mean that there could be a risk of the claim not being paid out at all. So at the point of application, it's very important to make sure that all existing medical coverage are being declared truthfully, and that will help the speed of the claims, regardless of which company you're buying from. And the last common question that I always get is, I have my company insurance, so do I still need an integrated shield plan or not? So most of the time, company insurance comes in the form of employee benefits, whereby some of the bigger companies might cover employees for medical treatment up to maybe 20,000, 40,000 a year. So this is in terms of the limit under the company insurance. If you compare this limit versus the integrated shield plan limit, the limit is rather low, but it's still a good to have because it's given to you as long as you are working for the company, right? So there will be a little bit of overlap if you have your own integrated shield plan. So I mean, there's no right or wrong. You could fall back on your company insurance first. However, for integrated shield plan, it is really your own personal one. So the question to ask yourself is, will you be staying in the company for long? Because you are insured as long as you're working for the company. What if you change, you move to a different role, move to a different company? Then by the time you have to start buying again, you have to start looking around for your medical insurance again. That may be that you may or may not. I mean, if you may have problem buying into a health insurance because of some medical conditions that have developed over time. So that I think that's one important consideration. And so okay, I think that's the okay. So I think we have come to the end of the session. Thank you for staying with me until now. If you have any If you have any questions, do drop an email. If you and like what I mentioned, if you are interested to get a copy of the slides, I'm happy to share. Just drop an email also. So with that, thank you for staying with me and have a good day ahead. Thank you.